morning, everybody. Welcome to Protect Your Eggs and your weekly market update. Remember, we're trying to manage our 401ks, IRAs, and by following the money. Now, there's a lot of stuff going on in the news this week. Once again, Republican take over the House. I saw a great article on oil and the battle between Saudi Arabia and oil prices trying to drive the U.S. fracking industry down. And I saw another article this morning on us talking about us as the U.S. lifting our ban of exporting oil to the world market. A lot of interesting things regarding oil. But let's take a peek at the stock market right now. Looking at the S&P 500 right here. We're looking at the ETF. And you can see we're flatlining right here. We've kind of rallied back up. I was really concerned about this rally because it was actually a faster move to the upside than this downside move. That always makes me concerned. So the market is in safe territory right now, but this could change. We've got some other mitigating factors here. Remember, the market is at 5-year highs, all-time highs as a matter of fact. But let's take a peek and get rid of that. And let's look at the IWM, which is the Russell 2000, or small caps. And small caps have led the way, not just since the new millennium, but since the turn of the 20th century, since 1920. Basically, small caps have outperformed the S&P 500, and they are lagging behind. You can see where we're right at this resistance point here, having some problems, trying to get above it again. So we are back here at this point. If the Russell goes down, it's going to pull the whole market down with it, and that's something you want to be aware of. And it is struggling again today. You can see here, let's take a look at our volume. Volume going to the downside, volume increasing. Volume going to the upside, volume decreasing. That's not a good sign. Those are signs of some divergence, that actually more shares are moving out of the market than money moving in, and that's going to have some downward pressure on the markets. So, want to be aware of that. Do I have a crystal ball? Could we go up from here? Absolutely, we could go up from here. So, we're just going to have to kind of wait and see. Still in a cautious market here in the Russell. We don't have a clear buy signal yet, and we're just waiting to find out what's going to happen. Now, if you're managing your 401k or IRA, the S&P 500, anything that's labeled large cap is going to correlate really closely with the S&P 500. Anything labeled small cap, small or mid cap, is going to relate really closely to the Russell 2000. So if you're a new person checking this out, you're curious what funds you have in your 401k, go take a look. That's what you're looking for. Now let's bounce over to our bonds and take a look at what we got going on in the bond market. Check out the bonds. Had this nice rally up, nice pullback, and almost just flatlining, the exact opposite of the stock market. If the market starts to pull back, we could see bonds rally, which has been kind of impressive since the Fed has said, we're going to stop buying bonds. And the moment that happened, the markets rallied, and we've seen bond prices go up. We're limited on how far our bonds can go, though. If our bond prices stall somewhere, we hit the ceiling, they can only go so high. Rates are at historic lows, so that means prices are about as high as they're going to get with these really crappy low rates. I'm not a fan of bonds at this point, especially you baby boomers out there. If you're totally invested in bonds, you have a lot of downside potential going on. But they are in safe territory, that being said. So, yeah. Let's look over at gold. Gold still looking crummy. We had this rally, we had this breakdown, rally, breakdown, couple of gap downs there in a row. We repaid this gap here, and we're churning sideways. Everything seems to have moved sideways this week. The downside is where gold seems to want to go. Remember, gold and oil are typically fixed together, so if oil's losing value, there's a good chance gold is going to lose some value as well. And we're going to wait and see what happens here. Gold losing value is also something else to be aware of, that it could be a sign of deflation. Ooh, how about, with all the printing of money out there, everybody's talking about inflation, but what about deflation? Problem is, everybody's printing money, from China to the Eurozone, India, everybody's been printing money, and we just said we're going to stop. And, if gold was telling us that we were going to stop, it was telling us back here in September. And the market has always known what was going to go on well before we did, and gold prices are dropping. So gold is in a hurting unit, not a safe buy at all. You want to steer clear of gold. Your bonds are looking really safe. Nice little pullback going on there, treading sideways. Your Russell 2000 still in caution territory. We need to get above our previous high to show signs that we actually want to go higher. Until that happens, the Russell is in questionable territory. Now, it doesn't mean we make any changes to our accounts. It means we just are on our toes, ready to make a move. Now, if you want to learn how to make those moves, become a Protect Your Eggs member. We have tutorial walkthroughs, all video setups like this that will walk you through your 401k, show you what to look for, and give you options that you probably didn't get when you sat down and enrolled in your 401k for the first time. Let's take a peek at the S&P 500 here. And the S&P 500 is in some safe territory here, but there are some questionable things going on, particularly with the Russell. So that is your weekly market update, and I will see you next week. Thanks. Bye.